Hello everybody and welcome to this week's Markets to Watch from Smack the Markets for the 8th of June. So better than expected non-farm payroll numbers on Friday helped push the Nasdaq to all-time highs and also allowing the S&Ps and the Dow to put in sterling performances. Now the markets have had a weekend to think about it. Let's take a look at how the markets are looking and some of the opportunities that we're looking at the beginning of this week. So if we come across and take a look at the Dow first of all. Now the Dow and the S&Ps, they're not up to all-time highs. They're sort of far from it at the moment. But again, they've put in sterling runs over the past few weeks, as we can see. The market now is sitting on top of the 27,000 level, with the next sort of structure point we have here, which is around 27,570, and above that we've got that 28,000 level. So at the moment markets are looking sort of quite stretched. They've had a very good run. I think if we see a break underneath 27,000, then we're likely to see some deeper retracement here. Just noting on the daily time frame that even a retracement all the way back into 26,000 still leaves this market within a healthy long trend and just brings the market back into sort of fair value areas. So just sort of bear that in mind from a sort of retracement perspective. Having said that, the trend is long, and if we see continued strength here, we could be seeing 27,570 and maybe even sort of 28,000 to the upside. I still think that we might start to see a little bit of weakness coming into some of these markets, maybe just sort of retracement weakness as the markets sort of fall back for some deeper support. So if we take a look at the 4-hour time frame, we can kind of see where those necklines are. We've got 27,000 here, so if we see a break underneath 27,000, we could be looking for a move down to 26,600 here. Below that, we've got that 26,000 level, which was that level on the daily time frame. So these are the sort of structure points that I'll be looking for to the short side if the market breaks underneath 27,000. If it doesn't, if we get continued buying and push to the long side, then we've got our clear trading windows there as well. Now, if we come and take a look at gold, gold hasn't been particularly faring very well because of the flight of optimism, I should say. So gold has been selling off in the later part of last week. Now, a couple of things that I'm keeping an eye on here. If we look at the weekly chart, it's a pretty messy chart structure here, but the market is underneath 1.7. So we'll have a look at this a bit lower on the lower time frames, but there is another level in here at 1660. So that's the level that I wanted to highlight. Below that, we've got another structure point here at 1580 or 1580. Now, if we come down to the daily time frame, we can see that the 1.7 level has been a very significant sort of price point, an important level for this market. Price is now sort of broken underneath there and now pulled back to retest that 1.7 level. So again, further weakness around this 1.7 level could see us for a move down to 1.660. If it gets underneath there, then the next level to the short side is that 1580 level. Certainly on the daily time frame, the indicators and everything are sort of pointing to the short side. Now, if we come to the 4-hour time frame here, and I just want to sort of zoom out of this a little bit so you can get some sort of context of this sort of choppy sideways action. We can already see here that the latter part of this chart here has already put in the structure of a short trend. We've got lower highs, lower lows. The moving averages are in the right order. We've got agreement to the short side with our momentum indicators. And the market now, after making a lower low, has now pulled back into that 1.7 level here. And it's just sort of coinciding with the moving averages. There's resistance there that's been a previous support level. So we're keeping a close eye. If we see weakness here, we could be looking for 1.660, as I mentioned earlier, which is all the way down here below the last low. So we're keeping an eye on sort of more weakness in gold. If that follows, we're likely to see, again, a little bit more supportive of the US equity markets higher. So coming over to the Forex markets, if we take a look at one that we haven't looked at for a long time, it's Euro Swiss. A lot of these Forex markets are up against weekly structure levels. Having said that, Euro Swiss is looking a little bit more sort of bullish here, being within a trading window. So just taking a look at this on the weekly chart, you can see that the market has bounced off this sort of lower level around sort of 105. We now got through this sort of 108 level here, and you can see that this level has been quite significant support and resistance going back through the market. You can see all of this through here. Now, it's retested this level, and it's now still looking sort of bullish. So the next sort of level that we have here on this market is that key 1.1 level up here. So there's still significant room within this sort of trading window. Things are looking quite extended, as a lot of these Forex markets are at the moment. So again, there could be some sort of retracements, but this market has already retraced on some of these lower time frames. So we're keeping an eye out for sort of further buying activity, for moves up towards that 1.1 level in the latter part of this week. So there's a few markets there that we're keeping a close eye on in the trading room going into the start of this week. I certainly hope it helps, and look forward to speaking to you next time. Bye for now.